So when you look at media companies in particular, Netflix, Spotify, Meta, Rich, all down more than 50% so far this year. How long does this keep up?
Look, this is pretty ugly. And I think part of the challenge is we're in sort of uncharted territory, Emily. Like, we don't, sure, we know what a recession looks like. We know what global or geopolitical unrest looks like over in Eastern Europe and Russia, et cetera. What we don't know is sort of the unlock effect of the pandemic. And what I mean by that is, has consumer behavior really fundamentally changed? You're looking at sort of a surge in vacation travel, right? People want to be out of their houses. Try to book a trip to Disney World right now. It is complete and utter insanity trying to get into Disney World, even without European travel. So what's really happened to streaming? Has there been a fundamental change in sort of the future of streaming television, or the shift from linear television to streaming television? Or do we just shoot 2 years too far up the curve too fast? And it's going to take time for consumers to actually catch up now, and for it just the business and valuations to sort of catch up. And that's what we're struggling with, what everyone investor wise is struggling with. Like, we used to talk about there being 700, 800, maybe even 1 billion homes that would do streaming television, whether you're talking about Netflix or Disney. Like, that was the total addressable market we call TAM that everyone was excited about. Has it changed? Like, is it much lower now? Is the time to get there longer? Are pricing going to have to be, lower to get there? Those are the things everyone is grappling with. Like, I don't think we've fundamentally changed, but I do think the combination of pandemic unlock, geopolitical, inflation, maybe recession in Europe, maybe fears of recession in the US, like, all of that is, look at the price of eggs, right? There are a lot of things going on right now, and nobody, right? Like, there is nobody right now that understands what the other side of a 2-year pandemic looks like, because we've never lived through this in the markets we have today with that effect. And so this is just new and virgin territory from an analytical standpoint, and it's making it very hard, not just for us. These companies can't predict their business.
So you recently said advertising is falling apart. The cable bundle is falling apart. Streaming has slowed. Is there a good media business to be in right now?
It is, well, the obvious one, right? I mean, there's two businesses that are obviously big beneficiaries right now. One is, my partner, Brandon Ross, covers the entire live entertainment space. I mean, Live Nation is on fire. It is just an insane how good that business is. Tickets go on sale and they're sold out 2 seconds later. So live entertainment is clearly a beneficiary right now. You see it across that category. The other one, and you're showing Netflix on the screen in terms of sort of what content is available. The business that's also benefiting from this explosion of streaming services is content creation. And if you're in the business of making content, that business has gotten far, far better because there's incredible demand from all of these services. So production studios have been big beneficiaries. The problem is there's not a lot of pure play production studios to actually invest in. Like, Sony is not a streamer, right? Sony doesn't have a streamer. They have a lot of other businesses, but Sony's production business has been incredible in terms of what they've created over the course of the past year. The problem is there's just not a lot of ways to play that. Obviously, in live entertainment, you can own Live Nation. That's been a great stock.
What are you expecting to see when we see Disney's results? I mean, you mentioned that theme parks are booming. And so if you're a business like Disney and you have a streaming arm, but also a theme park arm, are you well insulated or not?
You would have thought they'd be well insulated. The stock, obviously, the stock peaked at 190 and is sitting at 112-ish. I don't know where it closed today, but it has been beat up. I mean, Disney's been trading down every single day. And I think part of it's really twofold. One, I think global economic fear, right? So fear of not so much how good the theme parks are right now, but what happens if we go into more of a global recession is certainly a fear. And then the other piece of it, right, is, the hope or the reason to own Disney. For multiple years, the reason to own Disney was, hey, this is a company with a Netflix inside, right? Like, they're the only company coming out of the Fox acquisition. This is the only company that can really rival Netflix and create a Netflix. Well, The problem is, as you just showed on the screen, Netflix's valuation has been eviscerated with it. So what is the implied value of this Netflix inside of Disney? It's obviously far less. And look, Emily, the other piece of this is both Netflix and Disney in the past 3 months, sort of out of nowhere, have come out and told you, in order to grow our businesses, we now think we have to incorporate advertising. That was something, I mean, Disney was on record saying just a year ago, we don't want to put advertising in Disney Plus. Now they're going to start doing it later this year. Netflix had been pretty much religion, was never going to do advertising. And now all of a sudden, Reed Hastings is talking about how in the next couple of years, they're open to incorporating advertising and think it could be additive. And so, do you believe that advertising in this content is helpful? It's sort of a red flag for investors of, why are these companies all of a sudden, who didn't feel like they needed advertising, whose prices are so much cheaper than the cable bundle, why all of a sudden are they resorting to advertising? I don't hear a whole lot of consumers go, I know every consumer wants lower prices. I don't hear a whole lot of consumers saying, God, I really would like advertising inside of my media content.
Well, here's something that consumers, most of them do want, and that is sports. Do you think, and Disney, of course, has ESPN, but could sports, we're seeing Apple and Amazon betting on sports, could sports be the answer? Quickly, I've only got about 30 seconds left.
I think sports can be an answer as an add-on. Sports as a dedicated streaming service, it's very hard to make the math work. I mean, Amazon's made the most robust move with Thursday Night Football. Let's see. I think I'm going to say, stay tuned. Amazon needs to show that they can generate a massive audience for Thursday Night Football, or the $1 billion they spent is going to look like a very bad investment for streaming. This is the biggest investment ever made in streaming sports. Let's revisit this when we see what the numbers look like in terms of viewership come the fall.